Hey everyone, welcome back. So today we're going to be diving into something a little bit different. Well, I guess not totally different, but how we like to keep things interesting here. So this is going to be a deep dive that's really tailored to, you the listener.
Yeah.
Specifically because it's based on, you know, all those great sources that you sent our way about Bayesian A/B testing in finance.
Yeah. Super interesting stuff.
Yeah, it's a mouthful, I know.
It is.
But I think a lot of people, when they hear A/B testing, they're thinking about like websites and, marketing and that sort of thing.
Right. Exactly. Like which button gets the most clicks.
Yeah. But then when I, started digging into the sources that you sent, it's like, whoa,
It's a whole other world, right?
it's a whole other world. So for our listener out there who maybe hasn't, gone too deep down the Bayesian A/B testing rabbit hole yet, can you give us like the quick and dirty on what makes it different from like just regular old A/B testing?
Yeah. So I think the best way to think about it is that traditional A/B testing is all about just kind of looking at the data you have right now and making a decision based on that kind of snapshot.
Right.
But Bayesian A/B testing is more like having a whole photo album. You're not just looking at the latest picture.
I like that.
You're considering all the pictures from the past, your prior knowledge, expert opinions, historical trends.
Right.
It gives you a much richer understanding of what you're looking at.
Yeah, that's a great analogy, I think.
Right.
So
Yeah.
kind of like instead of just blindly following the numbers, like you're bringing in some of that human element,
Yeah.
the
Yeah.
expertise, the intuition,
Right.
which seems extra important when you're talking about something as complex and unpredictable as, the world of finance.
Exactly. Because in finance, you're always dealing with uncertainty, right? There's always risk involved.
Always.
And Bayesian A/B testing allows you to factor that uncertainty into your models,
Right.
and that makes your predictions and decisions more robust, I think.
More grounded in reality.
You're grounded. Yeah.
Yeah. And it's not just about picking stocks, right? I mean, from the research you sent, it seems like you can use this for a whole bunch of different financial decisions.
Oh, yeah, absolutely. We're talking about portfolio optimization, risk management, algorithmic trading,
Mhm.
even things like credit scoring and, economic forecasting, like predicting what's going to happen with interest rates or inflation.
So it's a pretty versatile tool.
It's a very versatile tool.
Yeah. Okay, so we've laid the groundwork here.
Yeah?
But I know you sent over a couple of case studies that really bring this to life.
Yeah.
Should we jump into those?
Yeah, let's do it.
I know you mentioned you were particularly curious about the cryptocurrency example.
Oh, yeah, for sure. So this case study looks at a company called Crypto Bros Incorporated.
Okay.
And they're facing a dilemma that I think a lot of people can relate to, which is Bitcoin or Ether.
Right.
Which one should they invest in?
It's the question of the century, it feels like.
Yeah, it really is. It's a tough one.
Especially for someone like me who's, not a hardcore crypto trader, but even I've, thought about that.
For sure.
So I'm already hooked. So they're using Bayesian A/B testing to answer this question.
Yeah. So instead of just going with their gut feeling or flipping a coin,
Right.
they wanted to make a data-driven decision.
Love it.
So they pulled up the daily price history for both Bitcoin and Ether, just like you can do on Yahoo Finance or something.
Right.
And then use that data to calculate the potential return on investment or ROI for each cryptocurrency.
Okay. And they visualize this with those density functions, right? I remember seeing those in the source material.
Yeah, those are really helpful.
Yeah. It's like seeing a graph of the potential, ups and downs.
Yeah, it really helps you visualize the volatility.
Yeah, exactly. And the volatility was definitely there, which I guess you would expect with crypto. But what I found really interesting was that when you look at the results of their analysis, it wasn't just that, Ether looked a little bit better. It was that the probability of Bitcoin actually outperforming it was like way lower than I would have expected.
Yeah, their analysis showed that Bitcoin only had a 36% chance of beating Ether. Wow.
In terms of ROI. And to really drive that point home, they found that choosing Bitcoin over Ether could actually lead to an expected loss of over 200%.
Whoa. Okay, that is a big difference. It really highlights how important it is to, look beyond the hype,
Yeah,
even in a market that's, as exciting and kind of, buzzworthy as crypto.
absolutely. You gotta look at the numbers.
You got to look at the numbers.
And what I think is so cool about the Bayesian approach is that it allows you to quantify that risk.
Yeah.
Like crypto bros could actually put a percentage on the likelihood of losing money with Bitcoin versus Ether,
Right.
which I think is really powerful.
Yeah, I mean, you're taking the emotion out of it. You're actually looking at, what are the chances?
Exactly.
Okay, so we've seen how this works for choosing between two investments.
Right.
But what about when you have more options on the table, like a whole bunch of different asset classes to consider?
Yeah.
That's where our second case study comes in, right? The one with Locust Lane Investments.
Yeah, so Locust Lane is a global investment company.
Okay. And they wanted to figure out which sector of the economy offered the highest historical return on investment.
Okay, so they've got a lot more than just two choices to analyze here.
Yeah, they had a lot of options to weigh.
So how does Bayesian A/B testing even handle something that complex? It can't just be like a bunch of separate A/B tests, right?
Right. It's a little more sophisticated than that. They used a series of pairwise A/B tests, but they arranged them in this really cool decision tree structure.
Okay, I'm picturing like a tournament bracket.
Exactly, like
Yeah.
a tournament bracket
Yeah.
where different asset classes are going head to head.
Okay.
And the winner, the one with the higher potential ROI, moves on to the next round.
I love it. So they're systematically comparing like industrials, equities, real estate, bonds, commodities, all these different things to see which one consistently comes out on top.
Exactly. And what they found was that historically, at least, putting your money in industrial companies actually yielded a higher return than, say, real estate or even the broad stock market.
Really? I would have thought real estate would be like the more stable, profitable investment.
It's a common perception for sure. But, the data tells a different story.
The data tells a different story.
At least historically.
Now, of course, this doesn't mean everybody should run out and put all their money into industrials.
Yeah, no.
Past performance doesn't guarantee future results.
Exactly.
There are a lot of other factors to consider.
Yeah, like what's happening in the economy right now, global trends, all that stuff.
Right.
But what this case study does highlight is how Bayesian A/B testing can help you make more informed investment decisions
Yeah.
by providing this framework for combining data with human insights.
Right. It's not about blindly following the numbers. It's about using them to inform your judgment.
Exactly.
Okay, so after hearing about those two case studies, I have to admit, I'm starting to feel like Bayesian A/B testing is this like magic solution
Oh, yeah.
for all of our, financial woes.
It definitely is a really powerful tool, I think, but like any tool,
Right.
it's important to understand both the advantages and the potential pitfalls.
All right, there's no such thing as a free lunch,
Well, exactly.
especially in finance.
Yeah.
So let's talk about the downsides. What are some of the things that could go wrong?
Okay.
Or at least, things to watch out for when using this approach?
Yeah. So one of the biggest pitfalls I think you need to be aware of is something called overfitting.
Overfitting.
It's a common problem in any kind of statistical modeling,
Right.
not just Bayesian A/B testing.
Remind me what that is again. It sounds like something you do at Thanksgiving dinner.
So imagine you're like tailoring a suit.
Okay.
If you make it fit perfectly to the measurements taken on a specific day,
Right.
it might be too tight or too loose.
Yeah.
If the person's weight fluctuates even slightly,
Okay.
the same thing can happen with Bayesian models. If you make them too specific to the historical data,
Right.
they might not perform well when faced with new data.
Ah, so it's like that suit that's only good for that one specific occasion.
Exactly.
Right.
The model becomes too sensitive to the quirks of the past, and it loses its ability to generalize to new situations.
Gotcha.
Okay.
Okay, so how can you be sure that a model's not overfit?
Yeah, so there are a few techniques you can use, like splitting your data
Right.
into a training set and a test set.
Okay.
So you use the training set to build the model, and then you see how well it performs on the test set, which is like data it hasn't seen before.
Right.
If the performance is significantly worse on the test set,
Yeah.
that's kind of a red flag that it might be overfit.
It's like giving it a pop quiz.
Exactly.
Right.
To see if it really understands the material or if it just crammed for the exam.
I like that. Okay, so overfitting, that's a big one.
Yeah.
And then you mentioned interpretability, too,
Okay.
which I think is especially important in finance, where you're often dealing with a lot of different variables, economic indicators, market sentiment.
It can get really complex,
Yeah.
especially as you start incorporating more variables and prior information.
So even if the model's like spitting out accurate predictions, it might be tough to understand why it's making those predictions.
Right. It can be a black box.
Yeah. And if I'm going to, put my money on the line based on a model's prediction,
Right.
I don't just want the prediction. I want to understand the reasoning behind it.
Exactly. You need to be able to explain it,
Yeah.
especially in the financial world where those decisions can have, real consequences.
Okay. So overfitting and interpretability.
Yeah.
Those are two big ones to watch out for. What else should our listener keep in mind?
Well, choosing the right prior distributions is super important.
Right. The priors.
Like you mentioned the photo album analogy earlier.
Right.
How do you decide which pictures to include which pieces of prior information?
Right. That's where the art of Bayesian analysis comes in.
Yeah.
Seems like there's some subjectivity there.
There is definitely some subjectivity involved.
Right.
And if you choose priors that are too strong or biased, they can skew your results.
So it's important to be, thoughtful and objective when you're selecting those prior beliefs.
Absolutely.
Make sure they're based on solid evidence,
Yeah.
not just your gut feeling or your personal opinion or whatever.
Yeah. And you also want to be aware of the sensitivity of your results to those priors.
Okay.
Try different priors and see how much they affect the outcomes. If the results change drastically based on minor changes to the priors, that might be a sign that your model's too reliant on, subjective inputs.
Gotcha. Okay, so we've got overfitting interpretability, choosing priors.
Oh.
And did you say there was something else?
Oh, yeah. We can't forget about the computational side of things.
Oh, right. Of course.
Bayesian models can be pretty resource intensive.
Yeah.
Especially when you're dealing with large data sets or complex models.
Yeah.
You might need some serious computing power to run these analyses.
So it's not just about having the right data and the right model. You also need the right infrastructure to support it.
Exactly. And that's something to consider if you're thinking about implementing this,
Right.
in your own work. You might need to invest in more powerful computers or cloud computing services.
Okay, so we've covered overfitting interpretability, choosing priors computational demands.
Yeah.
Those are some pretty serious things to watch out for.
They are.
But hey, let's focus on the positive for a sec.
Yep.
We've talked about the downsides. What about the advantages?
Yeah, the advantages are numerous.
Yeah, what makes Bayesian A/B testing so compelling in the first place?
Well, I think maybe the most important one is that it allows us to deal with uncertainty in a much more sophisticated way than traditional methods.
Okay, I'm all ears. Why is uncertainty such a big challenge in finance? And how does the Bayesian approach help?
Well, think about it. Financial markets are inherently unpredictable.
Yeah.
There are so many factors at play, from economic indicators and geopolitical events to investor sentiment and technological advancements.
It's like nobody has a crystal ball, unfortunately.
Exactly. And traditional statistical methods often struggle to account for that level of uncertainty.
Right.
They might give you a single point estimate, like an expected return, without really conveying the range of possibilities.
So you might think you have a more precise prediction than you actually do.
Exactly. You might get a false sense of confidence.
Right.
Bayesian A/B testing, on the other hand, embraces uncertainty.
Okay, so it's acknowledging that we don't have all the answers,
Exactly.
but we can still make informed decisions based on, the probabilities.
Exactly. And speaking of informed decisions, that brings us to another key advantage.
Oh.
The ability to incorporate prior information.
Yes. Back to the photo album analogy.
Right?
We're not just looking at the current snapshot. We're bringing in all that valuable context from the past.
And in finance, that past context can be incredibly valuable, We have historical data expert opinions, market trends.
So instead of starting from scratch,
Right.
each analysis you're building on a foundation of knowledge.
Exactly. It's like having a head start in the race.
Right. And Bayesian A/B testing lets you do that in a systematic way.
Exactly.
You're not just throwing darts at a board.
It gives you a framework for combining data with human insights.
It's not data versus human judgment. It's data and human judgment working together.
That's the beauty of it. It's a true synthesis of quantitative and qualitative analysis.
Okay. I like where this is going. And then there's that whole dynamic updating thing that we talked about, too.
Oh, yeah.
Dynamic updating. What does that even mean in this context?
Well, it means that Bayesian models are constantly learning and evolving as new data becomes available.
Okay.
They're not static. They're adapting to the changing financial landscape.
So they're not stuck in the past.
Exactly.
They're constantly updating their predictions based on the latest information.
Think about how fast markets move these days. New information is coming in all the time.
Yeah, a model that's stuck in the past is going to be quickly out of date.
Exactly.
It's like trying to navigate with an outdated map.
Right. Bayesian A/B testing allows you to update your beliefs and predictions as new data emerges,
Okay.
which ensures that your models stay relevant and accurate over time.
So it's more like a map that's constantly updating itself.
Exactly.
Based on your current location and the latest traffic reports and all that.
That's a great analogy.
Okay, I think I'm really starting to grasp the power of this approach. It's not just about crunching numbers. It's about building a model that can learn and adapt as the world changes.
Exactly. And that's what makes it so well suited to the world of finance, where change is the only constant.
And this has been so insightful. I feel like I've not only learned a lot about Bayesian A/B testing, but also gained a whole new perspective on how we approach financial decisions.
I'm glad to hear that.
But of course, we made it clear, this isn't a one-size-fits-all solution.
Absolutely not. It's a powerful tool,
Right.
but it's not a magic bullet.
Mm.
You need to understand both the advantages and the pitfalls,
Right.
and you need to use it thoughtfully and responsibly. It's like any powerful tool. It can be used for good or for bad.
That's a great way to put it.
It all depends on the person wielding it.
Yeah. But for those who are willing to put in the effort and the thoughtfulness, I think it can be a game changer. I'm excited to see how our listener applies these concepts in their own life. But before we send them off to explore, there's one more piece of this deep dive we need to address.
Okay.
That provocative thought you teased at the beginning.
Okay.
The one that's going to, leave our listener pondering the bigger picture.
You're talking about the philosophical implications
Exactly.
of Bayesian A/B testing.
Like, what does all this mean for the future of finance?
Right.
How could this approach, if it becomes more widely adopted, actually change the way the financial world works?
Exactly.
I think it's time to shift gears and explore that final thought.
Let's do it.
Yeah.
When you really start thinking about this stuff, it's easy to get caught up in the nuts and bolts, the models, the data, the algorithms.
Right.
But I think it's important to kind of zoom out for a second and consider the bigger picture here,
Yeah. Like, what does all this mean for the future of finance?
Exactly.
How could this approach, if it becomes more widely adopted, actually change the way the financial world works?
Yeah, that's a great question. And I think one of the most significant shifts we might see is this move away from relying solely on intuition and experience.
I mean, especially in finance. It feels like it's all about who what your gut tells you.
Yeah, and like I said, experience and intuition are still valuable.
Yeah.
Especially in a field that's, as human-driven as finance. But I think when you combine those human insights with the power of data-driven analysis, like Bayesian A/B testing, you get something really special.
It's like you're not replacing human judgment.
Right.
You're augmenting it with data.
Exactly.
Giving people like a more robust framework for
Right.
making decisions.
Yeah, and I think as this approach becomes more commonplace, we're going to see a rise in what I like to call probabilistic thinking.
Probabilistic thinking. Okay, I'm intrigued. Break that down for me.
So it's basically the ability to think about the world, and especially the financial world, in terms of probabilities and uncertainties,
Okay,
rather than absolutes.
gotcha.
It's about acknowledging that we don't have perfect knowledge,
Right.
but we can still make informed decisions based on the best available evidence.
So instead of saying, this stock is going to go up,
Right.
you'd say there's a 60% chance it'll go up,
Exactly.
but there's also a 40% chance it could go down.
Right. It's all about acknowledging the inherent risk in everything.
Embracing the uncertainty.
Embracing the uncertainty. Yeah.
Instead of pretending it's not there.
Exactly. And I think that this shift in thinking could have a profound impact
Yeah.
on how we approach investing risk management, even just our overall financial decision making.
It sounds like it could lead to a more cautious approach.
Yeah.
A more data-driven approach to finance.
Which, honestly might not be a bad thing.
After all the ups and downs we've seen.
Right. Yeah. I think when you understand the probabilities involved, you're less likely to make those impulsive decisions.
Right.
Or chase after those, get-rich-quick schemes.
So it's like taking a more measured strategic approach
Right.
to your finances.
Yeah.
Not just relying on hype or gut feelings,
Yeah.
but actually looking at the numbers, considering the potential outcomes,
Absolutely.
and making decisions based on a more complete picture.
And this brings me to another possibility that I find really exciting, which is the democratization of financial knowledge.
Ooh, okay. Now that's a powerful idea. Tell me more.
So traditionally sophisticated financial analysis
Yeah.
has been the domain of experts and institutions, with
Right.
access to expensive data and tools. The average person might not have had the resources or
Right.
the know-how to do this kind of analysis themselves.
Yeah. It always felt like there's this barrier to entry.
Right.
Like, you need a finance degree just to understand what's going on.
But with Bayesian A/B testing, you don't necessarily need massive data sets or complex algorithms.
Right.
You can start applying these principles with readily available data and user-friendly software.
So this could empower individuals
Yeah,
to make more informed financial decisions,
exactly.
even if they don't have like a team of analysts working for them.
And I think that's incredibly empowering.
It's like leveling the playing field,
Yeah.
giving everyone access to the kind of insights that were once, reserved for the financial elite.
Exactly. Now, of course, this is all still pretty speculative, you know?
Yeah.
There are always going to be people who are resistant to change, who prefer to stick with the old ways of doing things.
Yeah, I can already hear some people saying this is all too complicated or I'll just trust my gut.
For sure.
Mm.
But as the benefits of this approach become more apparent,
Right.
as people see how it can help them make better decisions and achieve better outcomes, I think it's going to gradually gain wider acceptance.
So maybe it's not going to happen overnight, but it's a trend worth watching.
Absolutely. And who knows? Maybe one day probabilistic thinking will be as commonplace as balancing a checkbook.
That would be amazing.
Yeah.
It's like a whole new way of looking at the world, not just in terms of finance,
Right.
but in all aspects of life. Recognizing that uncertainty is a given
Yeah.
and learning to navigate it in a more informed, strategic way.
It's a powerful mindset to cultivate, and I think it has the potential to make us all individuals, businesses, even society as a whole,
Yeah.
more resilient, more adaptable, and ultimately more successful.
This has been such an eye-opening deep dive.
Yeah.
I feel like I've not only learned a lot about Bayesian A/B testing, but also gained a whole new perspective on how we approach financial decisions in general.
Me too. It's been a great conversation.
Well, to our listener, we encourage you to keep learning, keep experimenting, and keep pushing the boundaries of what's possible in the world of finance. The tools are out there. The future is yours to shape. Until next time.